What is up, everyone? Welcome to the weekend. It is Friday, March 13th. And while I'm not usually one for superstitions, the ASX 200 certainly felt the spook today. We started the day with a massive hangover from yesterday's 128-point wipeout. For a minute there at lunchtime, it looked like we might stage a heroic recovery, but the gravity of the Middle East conflict and some terrifying new inflation forecasts from the Big Four banks dragged us back down. The index finished the day basically flat, down just 12 points to 8,617. But don't let that tiny number fool you. Under the hood, this was a day of extreme winners and absolute carnage. Today we're talking about the war inflation trap, why the RBA is suddenly looking like the Grinch for next Tuesday, and our hero stock of the day, EOS. If there was one bright green light in a dark market today, it was Electro Optic Systems, ASX EOS. This thing was an absolute monster, closing up nearly 18.35% at 1174. Why the surge? Two massive unconditional orders totaling a $64 million. The big one is a $59 million deal for their Slinger counter-drone systems to an unnamed Middle Eastern customer. The second is a $5 million order for the US market. In a world where unknown projectiles are hitting cargo ships in the Strait of Hormuz, counter-drone tech is no longer a luxury, it's an essential utility. EOS is literally the defense shield trade of the moment. They've locked in these orders for 2026 delivery, and with the world getting a lot more dangerous, the market is betting this is just the tip of the spear for their order book. Now let's talk about the why behind the broader market weakness. Brent crude officially hit $100 overnight. This is a massive psychological and economic barrier. Iran's supreme leader Mojtaba Khamenei went on state TV basically saying the Strait of Hormuz should stay closed to exert pressure. The ripple effect. This isn't just about the price at the pump. It's an inflation tax on everything. CBA, NAB, Westpac, and now ANZ have all pulled a 180-degree turn. They are now all predicting that Governor Michelle Bullock will hike rates next Tuesday, March 17th. The IMF released a note today cautioning that while global growth is resilient, energy-driven inflation is the #1 risk to the soft landing. In plain English, the RBA doesn't care if the economy is slowing down. If oil stays at $100, they have to hike to keep inflation expectations from spiraling. Despite this, the banks were surprisingly recovered green today. However, the fear of a double hike in March and May is real. Let's look at the scoreboard for the rest of the market. The energy survivors, Woodside and Santos, both finished pretty much flat today, even though oil price is still climbing up. When oil goes up, these are the only safe harbors. Yancoal also surged 4.54%. If we can't get oil, the world turns back to coal. The gold crash. This was the shocker. Despite gold sitting near $500, the ASX gold index cratered over 6%. Why? Investors are worried about the soaring costs for miners, diesel and labor, and some de-risking ahead of the weekend. Especially Northern Star is totally smashed today with a bad guidance update, and Evolution also took a heavy beating. Rare earths. As we discussed yesterday, the frenzy has cooled. Linus held steady, but the juniors like Brazilian rare earths continued to bleed out as the fast money moved over to defense stocks like EOS. So, where does that leave us? We're heading into a weekend of massive geopolitical uncertainty. If we see more unknown projectiles in the Persian Gulf over the next 48 hours, Monday's open is going to be incredibly volatile. Thanks for hanging out with me this week. Grab a drink, get some sun, and let's pray for a quieter weekend. I'll see you for the pre-bell on Monday morning. Peace.